What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about Nike stock, which is now selling off a little bit over 17%, absolutely getting destroyed on the day after it reported earnings. So this right here is where it's trading at the moment, $77.71 after beating expectations on both earnings per share. Revenue was a slight miss, less than a 2% miss, and yet the company is absolutely getting destroyed here. So we're going to break this down on our MoneyVest platform. We're going to take a look at the company's fundamentals and break down exactly what happened here and what is the intrinsic value because of the fact that it's breaking down a huge support. It's basically trading back down to its same levels from back in 2020. So a 4-year low for Nike, and the peak was back in 2021, down over 55%, and is yet to recover to those highs. So it's a long ways away from those levels. As always, make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members only videos, as well as the early access, the beta launch that we're having on July 8th. So you can get a 51% discount that's going to be available for you for a limited time. So link's going to be down below. And first things first, let's break down exactly what happened here for Nike. So under the strategy shift, Nike had been working to drive sales through its own website and its stores rather than through wholesalers like Foot Locker. And this is something that we discussed, I think, a couple of years ago when Nike had discussed and kind of, spoken up about this strategy that, okay, you know what, we're going to be doing Nike Direct, where we're directly going to be selling to consumers through our own website, where we can collect own data and market it to our customers directly. But that backfired because there's been a lot of logistical issues. There's been a lot of hiccups and headaches related to logistics and, of course, supply chain and wholesaling. Everything has been, of course, not working according to the plan for Nike. So they basically recently began walking back on that initiative, and it went too far when it moved away from wholesalers. And the strategy can be more profitable and gives companies better control over their brands and customer data, but it can also create a logistical headache and come up with unexpected and costly hiccups for the company as well. During the quarter, Nike direct revenues came in at $5.1 billion, down 8% year over year, and wholesale revenues was up 5% to $7.1 billion, reflecting Nike's change of heart on direct selling. In fiscal 2024, Nike posted sales of $51.36 billion, which was basically flat compared to the same time last year, and it also is the slowest pace of annual sales growth the company has seen since 2010 for the business. And Nike executives attributed the sales miss to a range of factors. They said its lifestyle business declined during the quarter, and that momentum in its performance business, such as its basketball and running shoes, wasn't enough to offset it. And online performance was soft because Nike had a higher share of lifestyle products, more promotions, and fewer sales of classic franchises. And despite the traffic decline in China, sales in the region exceeded Wall Street expectations, coming in at $1.86 billion compared to an estimate of $1.79 billion, and was only geographical segment to top the estimates for the period. Everywhere else, they came in a little bit lower. So $1.01 per share adjusted versus 83 cents per share expected. $12.6 billion in revenue versus $12.84 billion in expectations here. And the company reported net income for the 3-month period ending in May 31st was $1.5 billion or 99 cents per share, compared to just over $1.03 billion or 66 cents per share same time last year. And sales also did drop about 2% year over year for the business as well. So again, plunging after retailer says quarterly sales will fall 10%. So guidance, of course, coming in not that great, and warning on China weakness as well. So that's the reason, down almost 80%. So if you come over to our MoneyVest platform, so let's just plug in NKE, that's Nike, definitely selling off quite aggressively. As you can see, the price action here, absolutely getting destroyed. Market cap $144 billion. And the M score is going to be at 3.43 out of 5. So that's where we are at the moment for the M score, which is not terrible, but of course not the best either. So if you do like a 7-year analysis on the business, you'll notice that a lot of these metrics are either growing slowly or growing or are somewhat stable. So for example, operating income, net income, and EBITDA have grown by about 3 to 5% over the last 7 years. If I plot for 10 years, you'll notice that the growth has been somewhat slow, right? So that's why it says slow growth over here across the board. So revenue here, this has been the increase, which is good. I mean, it's gone from 27 billion to 51 billion. So that again is pretty decent, 7.3%, but it's still not high growth. High growth would be considered at anything over, double digits we're talking. Everything else, again, moving in the right direction, but albeit slowly. Gross profit, operating income, net income. Then we got operating cash flows, free cash flows over here. So again, everything moving in the right direction, however, rather slowly. So this right here, gross profit, 2020 did see a bit of a decline from 17.4 down to 16 billion. And now increasing to almost $22 billion in 2023. Operating income and everything else, net income, operating cash flow, free cash flow, have been coming down over the last 3 years. As you can see, operating income's gone from about $7.1 billion down to $5.9, almost $6 billion. And then we've got operating cash flow gone from $6.6 billion down to under 6, so $5.8 billion. And free cash flows have also gone from $5.9, almost $6 billion, down to as much as $4.8 billion. So really 2021 marking a peak for a reason, because fundamentals also started to roll over for this company. And then if you plot for, let's say, margins, if you come down, you'll notice that gross margins, operating margins, net margins, EBITDA, operating cash flow, everything's been compressing for the company because it is, more or less coming down. So operating margins 11.55% compared to an average of almost 13. Net margins now sub 10% in 2023 compared to over 10% on average. Then we got EBITDA margins in 2023, 13.23 compared to 14.8, almost 15%, and operating cash flow and free cash flow margins also coming down compared to their averages. Free cash flow is the only one that's more or less stable over the last 10 years or so, but even those have been slightly rolling over, or they have increased a little bit. They've been a little bit more unstable, but of course coming down from 2021 numbers here. So that's where we have a little bit of that compression from 2015, 2016 being some of the higher peaks here, 45, 46%, now coming down to 43. And then, of course, net margins also for the last 3 years really compressing a little bit for the business. So coming down to efficiency now, scores a 3.6 out of 5. One more thing I wanted to point out is the share buyback is actually good. So shares are coming down. So they've gone from about 1.8 billion down to about 1.5 billion. So that's actually a pretty aggressive share buyback of 1.5% on a, let's say, 5-year basis. We've also got a 1.1% share buyback. So that's, again, very, very good for the company here. So they are actually deploying cash and, of course, buying back shares. When it comes to efficiency, return on assets, efficient, highly efficient on ROE, return on invested capital, return on capital employed, everything is pretty solid. Stock-based compensation as a percentage of free cash flow is pretty high at over 15%. So that's the only place where it scores lowest in efficient here. But as a percentage of revenue, as a percentage of operating cash flow, it's more or less stable to somewhat highly efficient. Financial metric, cash is increasing to over 10.6 billion as of 2023. And almost $9 billion in debt, which has also been increasing a little bit faster than the cash amount. So that's something to keep in mind. That's why the net debt situation is still pretty solid. However, it is diminishing. So you can see the last 3 years, it is now getting closer and closer to zero. So again, 2021 was the best at negative $4 billion. If you come over to, let's say, 10 years worth of analysis, they did have a positive net debt in 2020, then a huge amount of negative net debt in 2021. And of course, last 3 years, as I pointed out, once again, moving in that close to zero territory. And that's exactly what happened. You'll notice that it actually 2015 all the way through 2019, they went from negative net debt of 4.6 billion then came to positive numbers, right? So decreasing, and then turning the corner towards a positive net debt, meaning having more debt than cash on the balance sheet. And then same thing is happening right now for the past 3 years as well. Something to keep in mind for Nike here. Now, coming back down to some of the other numbers here. So current ratio, quick ratio is pretty good. Debt to free cash flow is under 2. So that's also pretty solid. Assets over liabilities over 4. Assets over total liabilities and total debt also pretty solid. Cash to debt over 1.2. That's very good. Solvency ratio 25%. That's solid. Inventory as a percentage of total assets at 22%. So they've been pretty good in terms of managing inventory. They actually dipped down in 2021 because consumer spending was so high as a percentage of total assets. And then, of course, last 3 years, you'll notice that they have just been going higher. And now they're back to the levels that they were back in 2020 in terms of inventory as a percentage of assets here. Now, when it comes to valuation, prior to the sell-off, was trading at a bit of a premium valuation at 32 times earnings multiple. And price to sales running at a little bit over 3.2, much lower than its average on a 10-year basis that we're looking at. And then if you come out down to price free cash flow, 33, again, premium valuation. Some of those multiples like price to cash on a 10-year average basis, sure, it was trading at a bit of a cheap valuation considering how much it's already sold off. But in terms of price to earnings, price to free cash flow, price to cash, and we got price to operating cash flow, it's trading at a bit of a premium valuation as well. And you can also start plotting in for fundamental analysis. You can come over here, income statement, balance sheet, cash flow over the last, let's say, 10 years if you want to. You can also take a look at the quarterly data. So right now for today's quarterly report, the data is not loaded yet because it's going to take time. We're going to upload the data here fairly soon. As soon as our data provider uploads the data, we should have that. But this right here is the last 12 quarters worth of revenue, gross profit, operating income, and net income as well. And what you'll notice is that there's been a very, very much of a lack of growth here. We haven't really seen much growth, but especially if you consider gross profit, again, more or less stable. And then finally, operating income, net income over the last couple quarters have been coming down, and this quarter also is going to be lower. So that's 3 consecutive quarters in a row that we've seen quarter-over-quarter decline for Nike, which obviously is not great news for the business. Now, if you come over to cash flows, again, let's just plot free cash flows as well. Again, a little bit more unstable. There hasn't really been any consistency in terms of Nike's free cash flow at the moment. And that, again, causes a little bit of sort of uncertainty with regards to what the future looks like for this company. Now, when it comes to analyst estimates, you'll notice that we've got a buy rating on the stock still with 33 ratings, only 3 sells, 14 holds, and 16 buys. High price target of 136, average of 110, and a low price target of $75. And the compounded annual growth rate for Nike over the long term, we're looking at almost 12% for the business, right? So 11.98% by 2030 with an average earnings multiple, or excuse me, the earnings per share at over $7.13, and revenue expected to go from 51 billion to over 70, almost 71 billion. That's going to be a growth rate of just under 5% for the company. So if you come over here to our tab and now analyzer, we look for a discounted earnings multiple model, and last 5 years PE multiple. If you come over here, let's come over to 5 years. Over here, last 5 years price earnings multiple of almost 50, but since we are analyzing for the last 7 years, if you come over here, last 7 years earnings per share have grown at almost 6%, so that is a really, really small growth rate of 6%. And if you come down, the price earnings multiple on average has been over 42, so that is a very, very high, very rich price to earnings multiple for the company. But let's just take a look at the discounted earnings model for 7 years. For 7 years, we're looking at a 4.36% the last 7 years, but analysts are forecasting for 12%. So let's just go with 10% here. Then let's just go with a P multiple of about 30, which is significantly lower than its 7-year average. And we're going to do the same number of share dilution, margin of safety of 10%, and 12% discount rate. And if you hit calculate, we're going to get a fair value of about $88 a share. And right now the market price is not updated. This is going to update with WebSockets. We're still working on that because WebSockets in real-time updates takes a lot of data, a lot of network issues happen. So we have turned that off right now. So right now the market price that you see is not the actual market price because, as we know, it's trading at $77. So it would already be considered at undervalued. And if we can go a little bit lower on the P multiple, I would, because of the fact that 30 times, 45 times is very, very high in terms of that price earnings multiple. So $74 being the quote unquote fair value for Nike would be appropriate with a 10% growth rate in earnings. However, the last 7 years, they have really grown at 4%. I don't know why analysts are forecasting for a 12% growth rate. So that's why I think it's really important for us to understand that it's possible that it actually grows at a lower growth rate and not 10%. And if that happens, it's possible that the fair value would be even lower. Because if I go, let's say, 6%, you can see that in the sensitivity grid. If I go with 6% and 25 times, we're looking at $57 as the intrinsic value. If you go with 8% and 25 times, we're looking at $65 as the fair value. So really depends on where your expectations are. But for me, I think Nike is one of those companies that it doesn't really offer a long-term moat. Yes, it's got huge brand around it. It's got marketing and it's got apparel. And, I'm a huge fan of Nike myself as a consumer. But as an investment, there's a lot of threat to what Nike could be over the long term. And for those reasons, I'm not very excited or interested even after this sell-off. I would maybe consider this from a trading perspective. Could be a stock that I end up trading in the future. And the next support, unfortunately, is going to be sitting all the way down here at close to $72 a share. But this is just not a stock that I would be looking at from a long-term investing standpoint just at the moment. But let me know your thoughts down in the comment section below. And, what do you think about Nike over the long term? And how are you sort of seeing this type of sell-off for Nike. So let us know down in the comment section below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, and of course, don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. If you want access to this entire platform with the beta access of over 51% discount, the pricing is going to be locked for you at this special price. Link's going to be down below. We're going to be launching on July 8th, 2024. So as always, happy investing. I'll see you all in the next video.